Hello, trading has closed on the 4th of April 2014, and I'm Jeffrey Tennant. Let's talk about the exciting day we had in the stock market on Friday. At Thursday's close, I said a few things. First of all, I looked for a rally, and we immediately gapped up 8.5 points. I also said that there were some longer-term sell signals based on Tom DeMark's work, and clearly, so far, that has worked as well. There were some failed mejt targets from earlier in the week, 1878.15 minus and 1869.63 minus. There was nothing in the system that required them to print on Friday and nothing that required them to print anytime soon, but based on other factors, I said I didn't think we'd have to wait too long for them to print, and they did. During the day, we had a mejt sell signal right at the high. We had a recovery attempt, which the system said was not for keeps. But the system also says this whole decline is not for keeps and will retrace. It gives us new targets of 1893.27 and 1875.15 plus. Now it says in the book that there's an increased risk of failure when you have targets near a trend extreme and also when you have strong impulsive moves. So there is a risk that these will not work. mejt likes to leave a failed target right at a major change in trend, which I think this quite likely is. So we have to take these with a grain of salt. However, there is a buy signal on page 120 of my first book, which so far over a period of years has worked every time. It says that before Monday's close, we're going to get a rally, which is going to be a little bit stronger than the rally we had here of 7.5 points. Doesn't have to be a lot stronger than that, and it doesn't even have to start from this level because the rule doesn't say where the rally starts from. All in all, mejt is looking for a rally Monday. Let's look at some other signals. When the Standard & Poor index was hitting new highs recently, the NASDAQ wasn't, and that was a divergence that was a warning of trouble. Right now, the NASDAQ hit a new low, and the Standard & Poor didn't come close. So that's divergence at the lows. If you look at a 30-minute chart, we have a standard 61.8% retracement of the recent rally, which came in a straight line. Very often when that happens, this level holds and we rally to the 38.2% level, which is around 1876. Based on other people's work, there should be a retracement as well up to this descending trend line and even to that low here. And there's one bit of work based on somebody else's work that says we challenge the highs once again. Let's not forget that this megaphone is still a triangle formation, even though it's a reverse triangle, and that triangles tend to occur in the next to the last wave. Well, the short term isn't too bad. The long term is a different situation. This is a daily chart. Tom DeMark's work gave a pretty clear sell signal right at the high. There are a number of negative things in this chart. One is we had an outside reversal bar. It promptly took out the close of bar 8 of countdown. It's not in DeMarc's work, but my own trading rule says that that typically leads to lower prices. Another one of my rules is that reversal formations involving the upper Bollinger Band, when that band is flat, lead at some point to a challenge of the lower band. I will tell you that based on some modifications of DeMarc's work, we also have long-term sell signals on the weekly chart and the monthly chart. When the monthly, weekly, and daily chart are all in alignment like that, it can lead to some huge moves. And even though a number of his signals have failed on the recent rally, they don't all fail. And a sell signal of this magnitude is compatible with the end of the entire 5-year bull market. As far as Monday is concerned, I'm looking for a rally. It doesn't have to be much higher than this high here, and it might not be tradable, but I think there's a reasonable chance we get in to the 1870s, the middle 1870s. As far as the longer term picture is concerned, the market's probably in real trouble here, and that's the call.